you sell, you make money when you buy. Robert Kiyosaki. It's not about timing the market. It's about time in the market. Max Templin, YouTuber. I came across these two quotes when I was researching for this video, and I felt like they spoke to the core of this particular strategy we're about to talk about, the dollar cost averaging strategy. Now, this is one of the best strategies when you are a hodler or a crypto investor that is trying to buy crypto over a long term or a long period of time. Most people ask, when is the best time to get into the market, or when is it the best time to buy a particular coin? And to be honest, no one really knows, much less me. Anyone who tells you they know when the market is going to dip or when the market is going to, go up, go on a bull run, they are lying to you. They're probably trying to scam you. That's as far as I'm concerned and as far as I know. But with the dollar cost averaging method, you do not have to worry about that. You do not have to worry about what's going on in the market, what the media is saying about which cryptocurrency going up and going down. What you need to focus on is the project that you've decided to invest in. The things you need to ask yourself are, do you believe in it? Is it here for the long term? Is it here for the long run? And do you think its utility will be relevant? Will it stand the test of time? Just like you see things like Bitcoin have done, like Ethereum, even though Ethereum is an altcoin, Bitcoin is the OG cryptocurrency. So you would want to visualize it like that. Do you see its purpose or its use case being important as time goes by? 10 years later, do you see it being relevant? Now, once you've asked yourself those questions and found answers, you can start to purchase this asset. Now, you can do this in different ways. You can do this either daily, weekly, bi-weekly, monthly, bi-monthly. It really depends on you and what you're trying to achieve. The one thing that you will need to remember is that consistency is key, just like with any strategy you're trying to follow. So it's better even just deciding to put $5 bi-weekly than trying to put $150 today and then trying to project that, okay, I'm going to do the same thing next week. When you're not sure about your finances, it's better you break large investments down into smaller pieces and allocate them over certain time intervals, right? And this is what the DCA strategy is basically about. It's about deciding to follow an investment schedule of sorts where you commit to putting up a certain amount of cryptocurrency over predetermined time periods, right? So like I've mentioned, you can go with that weekly or bi-weekly. You decide, okay, every week I want to put up like $10, right? And then you stick to buying $10 worth of this crypto asset every week, no matter what the prices are saying, no matter what the market is saying, whether it's in a dip, whether it's in a bull run, you just purchase more of this cryptocurrency. And you decide that, okay, this is a long-term investment and I'm willing to wait it out. I'm not listening to anyone who is telling me, what is going on in the market, and you know how volatile it is. Things change and people panic, and you wouldn't want to be part of that whole ruckus. That's why this particular investment strategy is important, and that's why it works for many people. One thing that goes without saying is that this is not financial advice. This is purely for educational purposes. It's just information being relayed to you in the hope that you will do your own research, your own due diligence to find out that this particular strategy is the one that is right for you. So once you've done that, you can go ahead and invest in it. Now, in the next segment of this video, I'd like us to talk about the advantages of using the DCA strategy. The first one is it eliminates the hassle of trying to study the charts to realize when you can buy or to find a buy point or an entry point. Instead, it allows you to set up a system that works for you. There are platforms like Binance that offer features such as auto invest, which utilize this strategy and therefore reduce your workload post setup. The second advantage is that it removes the risk of late entry into a project that you believe in. Say you've done some research on a crypto project and you realize, okay, you believe in the use case, you believe in the project itself, and you want to invest in it. Instead of deciding, oh, I want to invest when I see it climbing, maybe when I see the bull run coming, which can be hard to time, you just keep steadily investing using the DCA strategy. And this allows you not to care about the price point or the entry point that you get into, because you're consistently investing. You've committed to this thing. And that's where the advantage comes in. It basically gives you an edge over people that decide to invest when the coin is going up. So For the next part of this video, for the next segment of this video, I would like us to talk about what the DCA is. What is dollar cost average? Imagine you've been investing in Ethereum and you've bought it at 3 different price points. Let's say $1,500, $2,500, and $3,500. The dollar cost average would come to $2,500 because you will have found the average of these 3 price points, and in order to profit take or to make some money on your investment, all you need to do is set your selling price at above this average price that you found, this dollar cost average. And that is basically the explanation for a dollar cost averaging strategy. This particular strategy needs you to kind of keep a portfolio, right? You need to track your portfolio, the cryptocurrencies that you're putting in. And if you do not know how to do that, we have a video that's covering that using the CoinMarketCap platform. CoinMarketCap has a crypto tracker, and we have a video where we detailed how we set up our account and we started to track our cryptocurrency investments. So go ahead and take a look at it. It must pop up somewhere on the screen. It will also be linked in the description. The one thing you need to keep in mind is that this strategy is a long-term strategy. It's something you do knowing that, okay, I'm not going to eat from my investment in 2 months, 3 months. It's going to be maybe 5 years, maybe 10 years, depending on the cryptocurrency. But you know how volatile the market is. You're likely to make more if you hold for a long period of time. And with that, we've come to the end of the video. If you're interested in receiving more videos like this or being notified when we drop more videos or upload more videos, consider subscribing to the channel. Until next time.